There is a revolution brewing of growth and dividend ETFs out there. And these are really amazing for people looking to build up that retirement account or in retirement or semi-retirement. We're going to compare a bunch of these together today and just see who's leading right now. And it's a whole new thing, and more funds are coming out for people that are looking for that awesome retirement fund where you can get growth and distributions. And it's really important for people that need those consistent payments. And dividend growth ETFs are just absolutely amazing. Unlike high yield ETFs, the whole focus is to grow the share price and to grow the distribution. So over time, the total return continues to grow. So today we're going to compare and look at SPY-I, GPIX, T-SPY, and JEPI. And we're going to start here, and then after we do compare them to each other, we're going to throw SPY in a mix and compare it to SPY and see how it's doing against basically its underlying. And then we're going to talk about dip buy potential, which all these offer to some degree. So year-to-date total returns, as we can see here from Halloween, T-SPY is actually leading in total returns year to date, and that's actually one of the more inexpensive ones here on this list. And you could see JEPI being the lowest here, but still up 5%. And this is what you want. You want those total returns being positive. Now, if we look at max all time, we can start to see some separation here. GPIX, as you would expect, the gold standard, to be leading the pack there. But between T-SPY, SPY-I, and GPIX, they're all right there together, with JEPI trailing everybody since all these came online together. Dividend growth is so important. That's part of the reason you want to be in dividend growth funds, right? You want the share price to grow, and in addition, the distributions to grow over time. So you don't have to keep adding your money back into it to grow distributions. It does it organically. And we can see here, in a year chart, they've all grown to different degrees with their distributions. And this is just beautiful. But look at JEPI. Really a 12% growth in distributions over the past year, and GPIX at second, and then SPY-I, and then last with T-SPY with its dividend growth over the past year. And if we go to max all time, now this is a little concerning for JEPI. As you can see down there at the bottom, it's actually lost dividend growth over time as the markets have ripped. So that's a little, in my eyes, that's a little problematic for a long-term retirement hold. But you can see the other three are all positive, again, to varying different degrees. Price change. Why is that important? The higher the share price, the higher the distributions in most cases. And we can see here year-to-date, GPIX and SPY-I leading the charge with price change percentage. And who doesn't like to see their account value going up over time? I mean, call me crazy, but I know I do. And when you can have your cake and eat it too with growing net worth in your account and the distributions growing, these funds are just really awesome. So we can see here year-to-date price change GPIX and SPY-I leading the pack, with T-SPY just barely behind. Now, if we go to max all time, look at this. T-SPY is now jumped up to second place with its price change percentage. Not bad at all. I mean, it's SPY-I and T-SPY are right there together, but doubling them both is GPIX. Just look at that rocket that it's had in price change of max all time. And then poor JEPI is negative price change percentage. Now, if we look at their individual stock prices, you can see the three, GPIX, SPY-I, and JEPI, are all about here, with actually JEPI being the most expensive. So T-SPY down here at 25 really gives you a nice bang for the buck, I guess you could say. But we're going to look at its actual chart, and there are a couple things I do want to point out here on T-SPY and JEPI as well. Now let's throw SPY into the mix here. And total returns for this year, look at SPY, T-SPY, GPIX, and SPY-I, all right there. I mean, it's always going to have a better total return, meaning SPY or SPX versus these funds. But for year to date, they're all really close to it. Not bad at all. I mean, to be lagging the underlying, so to speak, it's not bad at all. You get the distributions and you get to keep your shares. Now, for year-to-date price change, look at this. This is where, holding SPY on the growth side really excels. You lack, obviously, in distributions with SPY, but that growth is just really nice and doubles the growth or triples the growth in some cases. And JEPI, year-to-date, you can see they're negative in its price change year-to-date. So I think the idea of these funds, right, before I continue on talking about their individual charts, is just something you can relax with, that you can keep all the distributions and just do whatever you want. However, let's talk about dip buy potential. And I think this is important. You can keep all the distributions, but when you get an opportunity to really buy on a fat, juicy dip, it only helps because these grow over time, all these, and you get the growth in distributions too. So SPY-I, really good dip buy potential. You can see here we're making new highs along with the market making new highs. Now, it doesn't have the explosive growth that you would see here in GPIX, which has better growth than all of them. But the dip buy potential in SPY-I is right there. I personally, if I own this, I own QQQI, but if I did, I would be keeping all the distributions and wait for something massive to happen and then go in. And that way, it's a really effective dip buy. And you can see here with T-SPY, it has not made new highs, whereas SPY-I has, GPIX has, but JEPI has not. So, that's a little concerning because the old high over there after inception was at 26. We haven't really reached that 26.96 yet here in T-SPY's price, right? Because if you look here at SPY, here's the old high over there in 2025, early part of this year, and how we've rocketed up past that. T-SPY hasn't done that. So that may be something that may concern you and may not concern you. But here, still, really good dip buy potential with T-SPY because you did get that explosive run after that correction we had earlier in the year. And, of course, GPIX, just massive with its growth for this type of investment vehicle that focuses on distributions and growth simultaneous. The growth here is just really, really nice. And again, I have GPIQ. I don't have GPIX. But if I did, again, just like I'm doing with GPIQ, keeping all the distributions and won't really average in heavily until we get some kind of major drop. And then JEPI here is kind of the laggard when it comes to the growth, comparatively speaking, to the other three funds. The thing that JEPI has, I want to bring this up here for a minute, is it has weathered down years. None of these others have been through a bear market cycle of a down year. Now, I will say this, it's kind of concerning that JEPI hasn't beat its old highs from back there in 2022, considering the market is just ripped from that point. So we can see lower highs in JEPI over time. That's probably a little concerning, holding it another 10, 15 years or whatever. But the thing you got to be comfortable about with JEPI is at least it's gone through a down year cycle, and we know what it looks like, and it hasn't even fully recovered from that. But with something like this, I think it's quite clear we could recover and surpass these highs if we start going through a bear market cycle. Same thing possibly with T-SPY, and of course with SPY I think we would also recover. I think these funds are just absolutely awesome for a retiree to consider because you get the dividend and the growth. You get your cake and eat it too. And you don't have to worry about NAV erosion. You don't have to worry about declining distributions over time, and they follow the market. I think they're all awesome, and it's just up to your flavor and what you like. I hope you enjoyed the video. Talk to you later.